Welcome to Edu Globe. Discover new ideas, learn exciting things, and be amazed every day. Is the war in Ukraine finally coming to an end? Globe. Yes, friends, just recently, President Zelensky visited the United States and held key meetings at the White House. Global discussions about peace talks are gaining momentum, and we can already see their direct impact on stock markets and oil prices worldwide. In today's video, we're going to break down: can these talks really bring the war to an end? If peace is achieved, how will it affect the global economy? And if the talks fail, what could the future look like for the world? Stay tuned till the end, because this information could impact everything, from your pocket to the global economy. The ongoing war between Russia and Ukraine has deeply affected not only these two countries but also the global economy and millions of ordinary people worldwide. Ukraine's GDP has shrunk by nearly 20 to 30% since the invasion began, while countless families face food insecurity, unemployment, and poverty as basic living conditions have deteriorated. Rebuilding Ukraine's destroyed infrastructure is expected to cost more than $500 billion over the next decade. The impact has gone far beyond Ukraine's borders. Europe has faced a severe energy crisis due to the loss of cheap Russian gas, which caused energy and food prices to soar. Brent crude oil once touched almost $140 per barrel, and natural gas prices jumped by nearly 300%. Globally, economists estimate the war has reduced world GDP growth by around 1%, while inflation increased by an average of 2%. Ukraine continues to struggle financially. Experts say the country requires at least $40 billion in aid each year, though the real figure may be closer to $150 billion annually just to stay afloat. At the same time, foreign investors remain cautious. Ukrainian bonds are weak, and large-scale investment is still limited. This shows why many analysts call it not just one country's war, but a war with global consequences. Rising costs of energy, food, and security are being felt in every corner of the world, making this conflict a shared challenge for all humanity. In recent days, global attention has shifted back to Washington, where Ukrainian President Volodymyr Zelensky has arrived for a high-profile visit. Meetings at the White House are expected. None have taken place yet. This anticipated agenda with senior U.S. officials, alongside coordination with European partners, has already improved sentiment without implying any outcome. The tone around these upcoming discussions suggests a renewed push for constructive dialogue, even as the situation on the ground remains complex. Financial markets reacted to the prospect of talks rather than to any concluded meeting. Ahead of the expected discussions, major Asian equity indices firmed, with Japan, Taiwan, and select China benchmarks testing multi-month highs. Investors read Zelensky's presence in Washington as a possible signal of reduced uncertainty and a chance, however modest, for diplomatic progress. Those expectations were complemented by a broader view that global financial conditions may gradually become more supportive for risk assets. Energy markets also tracked the headlines closely. Crude prices, volatile in recent weeks on supply risk concerns, eased slightly as traders weighed the possibility, not the reality, of lower geopolitical risk around energy flows. Any stabilization remains tentative. Oil and gas benchmarks are still highly sensitive to incoming news, and pricing can shift quickly if the diplomatic tone changes. Overall, these moves highlight how closely geopolitics and markets are intertwined. It is the anticipation of talks, not any completed White House meeting, that has influenced sentiment so far. Whether the discussions ultimately advance to escalation is uncertain, but the ripple effects are already visible across equities, commodities, and currency markets, underscoring that this conflict's impact extends well beyond regional borders. A hopeful peace agreement in Ukraine could bring real relief, not just to a war-torn nation, but to the entire global economy. With a ceasefire or resolution, the severe strain on oil and gas supplies could ease, bringing down energy costs that have fueled sharp rises in transportation, manufacturing, and household bills. In Europe and Asia, where families and businesses have struggled under mounting utility and food costs, this peace dividend may finally allow central banks to ease inflation pressures and guide consumers out of the pain of soaring prices. Investors would likely welcome the shift. Markets thrive on certainty, and peace would open the door to renewed confidence. East Asian stock indices and global equity markets could rally as the risk premium fades. A durable peace could also revive reconstruction momentum, benefiting sectors like infrastructure, metals, and construction, creating jobs and restoring hope. But the opposite scenario, failed negotiations, could be devastating. If tensions persist, oil prices may spike again, reigniting inflation and squeezing household budgets further. Countries fighting rising prices could see deeper economic pain, especially in regions already grappling with supply chain strains. Equities might retreat as investors retreat, sentiment sours, growth stalls, and families feel the pinch again. This battle isn't just about borders, it's about food, fuel, and futures. A peace deal could calm commodities and lift living standards. Failure risks rekindling the economic storm. The world is watching. Every headline now carries the weight of household budgets and global markets. In both Pakistan and India, the daily lives of ordinary people are deeply tied to global oil prices. When oil becomes expensive, the effects ripple across every part of life. In Pakistan, research shows a strong connection between rising oil prices and inflation, making food, transport, and electricity bills increasingly heavy on household budgets. Families are forced to cut back on essentials, while businesses struggle to manage costs in a fragile economy. India, which imports nearly 90% of its oil, faces similar challenges. Higher oil prices not only inflate transportation and electricity costs, but also raise food prices because fuel is essential for agriculture, fertilizer production, and moving goods. A spike in global prices can dent the rupee and widen the current account deficit, further straining government revenue and subsidies. This burden is felt by everyone, from the urban commuter watching petrol and diesel prices climb, to rural families paying more for basic groceries as transport costs rise. Electricity rates also grow when fuel costs go up, squeezing those already struggling to pay monthly bills. In these tough times, households must choose between essentials, shelter, food, transport, or education. But imagine a different future. If oil prices fall due to easing global tensions or better supply, this relief can be life-changing. Lower fuel costs help stabilize food prices, free up money for schools and health, and allow small shopkeepers and farmers to breathe again. Even a small drop can bring real hope to families long striving just to get by. Friends, the real question is, will these talks finally bring a ray of peace? Could this be the beginning of a new chapter where inflation eases, economies recover, and ordinary people can breathe with relief? Or will the world still have to wait for change? Just imagine, one single decision could make life easier for millions of families. What do you think? When will this chapter end, and when will people finally find peace? Share your thoughts in the comments below, your voice matters. And if this video touched you or gave you new insights, please don't forget to hit the like button, share it with your friends so they can stay informed too, and subscribe to the channel for more updates. Your support and encouragement mean the world and keep this journey alive.